What's up, traders? I got many indicators I've used in the past, but this one has to be one of my top 3 ever, the MACD. And inside this video, I'm going to teach you exactly how I would use it to trade the market every single day. Hopefully so you can implement it tomorrow and start making that moolah. No promises, not a financial advisor. Let's show you the MACD right now. All I ask is that you subscribe, like the video, because there's killer content on this second Market Moves channel all the time. So adding the MACD, pretty simple. MACD, and then you just click the Mac Baby D right there, adds to your screen, boom. If you want to switch any of the settings, super simple on TradingView, double click. You can see the fast moving average is 12. The slow moving average is 26. These are EMAs, so you can change those to SMAs. You can do whatever you want. You're your own trader in this world. So maybe I want this just to be a little bit darker. Maybe I want it to be a different color. I can do that. It's totally easy. So you can see right there, I changed the color of the MACD fast line. And the MACD is super simple. It's 2 moving averages. We trade this. We know this strategy. A moving average cross is a buy signal or a sell signal. And then a MACD histogram is just the distance the moving averages are apart. And let me show that and harp on that point just once more. You can see right here, the MACD is the highest and the moving average distance is the highest. Right about here and right about here, they're the same exact height difference. You can see the MACD has not changed heights. So the MACD is basically the difference, the histogram down here is the difference between the MA distances. And the further away the moving averages are, the stronger the trend. The further are they away, the more likely we are to come back together. As we see here, we get what we call a MACD cross, and then we see a histogram move from green to red. And let's talk about that just a tad more. So this is everything MACD here. This strength shows the trend, and then once we start consolidating, flattening, we know the trend's dying. So that's when the MACD starts shuffling down, and then we get a cross, which is an actionable seller buy signal. But real quick, bonus, if you stay tuned till the end, I'm going to show you how to just scan for MACD setups. So if you know nothing about the MACD, you can just get these setups straight to your computer, straight to your Thinkorswim platform pretty quickly. So we're just looking to play MACD on the trends, and we're looking to play crosses. There's a couple other things. This middle line is called the MACD 0 line, and when the MACD is above this line, we know holding calls is a good scenario if we are trending up and the moving averages are high and low. If we are below this line, we know the MACD is not a good buy. It's still pretty bearish at the moment, and we don't want to get into that. I'm going to show you examples in a second, but I'm just going over everything MACD. So again, these lines trending up, these lines with strength show the trend. If you get over the 0 line, shows a better trend, shows a more actionable call trend that we can get into. Once we flatten and we start getting this MACD to drop, that's when we start taking off position, thinking about going to the downside, because once we flatten, we eventually get a cross in the MACD, and there's your sell signal. You get the strength on the downside. So we don't really take MACD signals for puts above 0. You can, it's up to your discretion, but you can see here, that was a great cross to the sell side, but the MACD again was above 0. So some people don't take it. That's just up to them. And over here, you can see we get a cross on the above 0. So it's a definite buy, and we just rip on the MACD higher and higher and higher. Again, cross up here, bearish signal. You get a MACD green to red, but we are above 0. So taking that is up to your discretion. So I just want to point out the other reason I would get into a put play or take full profits is if we see the MACD top out. So this is when the moving averages are the furthest distance apart. We know moving averages tend to come back together. So the further they are apart, the more likely we are to reverse, consolidate, and end the trend most likely. So let's just show you on a live chart what this looks like so it makes a little bit more sense. As I click this, I'm just going to take this down to the bottom, put the chart back up here. This is the SPY. A lot of people day trade the SPY. You could easily do this with the MACD. I'll just make these a little bit smaller. And so let's zoom in on that one moment we were talking about earlier here. So you could see we had a buy signal, and this was a true buy signal because the MACD was over 0 and we got a cross and we went from red to green. You can see right above, this candle was engulfing. We had a wick on the top and bottom of the previous candles and a head or a body here, basically engulfing the previous body. So this ran up here, great profits. Usually $1 to $2 is 50 to 100%. This was $1.50 to $2 move. So that's 100% in the SPY. You get the MACD to come back down and you see it does not cross. So the MACD actually fakes us out here. It's a great re-entry point because we bottom on the MACD, we're above 0, and we keep ripping. We gap up the next day and we run. Again, 2 points is 100%. That's just about 2 points. So I'm going to point out the MACD on the higher time frame. If you're new to trading, guess what? Higher time frames have more meaningful readings. If you're always chasing the minute time frame with an indicator or the 2-minute time frame, you're just not going to make much money. You're going to get stopped out much more likely. So if you want to have more consistency in your trading, make sure to scale out, zoom out, and look for those big readings. So again, I'm just looking for the most meaningful crosses. So you can see right here, the MACD had a bullish cross on the COVID bottom. Every indicator called the COVID bottom. It was probably the most obvious indication on everything. It was just so violent, and then just the buy signals were so clear. But we didn't really cross the 0 line until here. So right around here, you can see the MACD cross the 0 line. So we're looking for calls around that point. You could have took them on this point, but some people don't take calls unless it's at above the 0 line. So although that was a great buy signal on the COVID bottom, we weren't really above the 0 line again until this section here. You can see the histogram change from red to green, and then we had a nice base as we fly in the market, trade sideways for a little bit, and come back. If we scroll over here again, sorry, there's a different bottom. Here's the COVID bottom. You can see the COVID top. I gotta scroll this up just a tad. The COVID top was perfectly called out by the MACD. We got a green to red cross. The COVID bottom, again, perfectly called by the MACD. The MACD is insane by calling macro trends. Only if you're getting it when the MACD is trending. So right here, the MACD is trending, and we're just getting a lot of chop. These are false signals. These are going to stop you out every day of the week. You got to be careful just blindly trading a MACD cross, because the MACD tends to just get intertwined with itself and then eventually goes back to its normal trend. You just want to look for a clear, decisive MACD cross, and you want that to hold. So you can look on the shorter time frames. You can wait a couple weeks to get in because this is the weekly chart. But for the most part, the MACD crosses, you just need a clear one. The ones that aren't clear are the hardest ones to make money from. You see a bunch of very tight MACD EMAs just consolidating here. So we're getting ready for a major move in the market. It's likely to go up, considering this is what happens when the MACD trades sideways and the market trades sideways. And so you can see right here, market's looking toppy, but MACD has no clear sell signals. We're actually squeezing on the MACD. So we're getting just smaller and smaller and smaller histograms. And the squeeze in any indicator produces a very large move soon. But let's go to the past again and show you how we would play this. You do see some clear crosses here, one clear cross, and that was a nice 2-week sell-off. You do see a bullish cross here, it looks like, and that was a nice runner for many weeks. And then again, a perfect top signal. So these indicators on the weekly time frame are incredible for calling tops. And again, I'm going to show you a scanner that does all this for you, so you don't have to look for the MACD cross and wait for it. You can find stuff that's crossing right now. But again, the general rule is if it's above 0, don't take puts. If it's below 0, don't take calls, but you can. It's not a rule that weeds you out from doing it. But as we scroll through, I think you can just see how fire this indicator is if it's done properly. So right about here, a slight bearish cross didn't really hold, but right here's that nice bullish cross that initiates a major uptrend in the market. So above 0, we're only taking calls. That's why you see this only working out for that bullish cross, not the bearish cross. Here, bullish cross, ripper right to there. Here's a bearish cross, sideways / down. And then down here, you got 2 bullish crosses and just slight uptrends. But in general, the MACD, you can use divergence for, you can use EMA crosses, you can use histogram changes, you can go off extreme movements. So if there's a very extreme move in the MACD, we know there's going to be an extreme reversal to the other side too, because there's always mean reversion in the market. If the market goes up 25%, if it's not supposed to, if the statistical chance of that happening is low, we know there's going to be a reversal of maybe half of that, or maybe a full reversal to the other side. So you can also trade MACD extreme levels. So you see here, the MACD hit a very extreme level of -4, and then during COVID, we hit an extreme level of -10. You just know that it's statistically not likely that that move can continue. So playing extreme levels is key. What some people do too is playing the color change in the MACD. You can see we went from red to light pink, and that was the first candle, the second candle after this inside candle. So that was a nice buy signal. You could have played the color change, and that's great for a buy signal. The sell signals, not so much, but you can see the color changes end up producing just a slight reversal. And once we start getting this MACD to lose strength, that's when you want to look to the other side of the move. So you see a lot of losses of strength on the MACD. So that's a basic overview. It's not too complicated. The higher time frames, the better. You can even go out to the monthly time frame, and you see the MACD just ripping on the SPY. So right now, look at the MACD. I'll just delete some of this stuff, but you can see we just went from dark green to light green on the monthly candle. And so the MACD is starting to get a very extreme reading in the SPY, plus 40. We've never seen this ever. So the SPY is giving us very, very strong buy readings, very strong trends. This may not last. We've only been to -15, and we've only been to positive 40. So this is a scary place to be for this SPY. Considering we just turned a green to light green candle, I think the trend could start consolidating, possibly dying. But like I said, we just want to head over to Thinkorswim now and show you how to scan for MACD setups, because we all don't have the time in the world to sit in front of the computer and wait for a cross to happen and boom, we're in. But what we want to do is just go to the scan tab on Thinkorswim, and what you want to do is add a filter for study, and from there you just go to license studies, crossovers. The crossover tab has a MACD cross. Super simple. So MACD cross right here, and you could do all these other crosses. Moving average cross, pretty much the same exact thing. You can do from positive to negative, from negative to positive. Super simple. Couldn't get any easier, guys. And this is an insane setup. So if you want to trade it, it's a very fun one to do. So if we look at some of these charts, we'll pull up the MACD and we'll see what it looks like. First off, we'll start with any stock over 30. I don't really want any low cap stocks in here. We can adjust these another time, but nice CSR. I'm just going to pick the first one I'm familiar with. Gilead went from positive to negative, so that's considered a bearish setup there. Let's check out Gilead. And let's pull up the MACD and show you what we're looking at here. So MACD, And here we are. So MACD was added to the bottom. You can see just not as pretty as toss, and this did hit on the daily chart. So if you're on the scan tab, you can scan for these things on any time frame. If you're a day trader, you might want to be on a 15-minute time frame. If you're a swing trader, the daily will work. So you can see right here, MACD just did a cross. So we crossed on the daily. It's not the strongest cross. So again, we're looking for something that, let's just make this a little bit easier to read. We're looking for something that crosses with momentum. You can see here, this is a strong upwards trend in the fast one, and the slow one is still just hanging there. You need a fast move on the fast one. So right now, both of these are pretty flat, but this is your bearish setup in Gilead. So look at here. If I was to just do some raw trend lines, you can see we broke down, or almost coming through this trend line, gap down on earnings, still selling off, inside candle. This is a great setup, and that MACD is just really helping us out there. And I'll just move my ugly face so we can see that MACD cross again. So you can see right here, just not the best cross. They're very flat to begin with. We want to trend in the MACD, or at one of the fast moving averages, but we did go green to red on that one. So scanning for the next one I know is Starbucks, Google, iRobot. It's not good when the big tech and all these big companies are crossing on the MACD. So last time we crossed on Starbucks was back here, and we had a correction of maybe 5%. This is another cross on the MACD, and we could be crossing for a 5% move again. So I usually add these to our trading group. I want to make sure that the crosses, any indicator that helps us trade better, comes to us. And so that would be an opportunity. You know, the Starbucks MACD cross doesn't happen often, and so this is a real big opportunity in Starbucks. A couple other ones were iRobot. That MACD cross is just very flat. I'm looking for one with some direction beforehand. And then we have Google not crossing, so I don't know where that one came from. Just Goog. And we have Now, Service Now, Facebook crossed. Let's just switch over from negative to positive. So these are bullish crosses. We have about 56 today. So again, if you guys want to narrow these down, all you have to do is make them optionable. You can do a lot of things. Look at this bullish cross on the CBOE. You can see this one right here getting very tight. So all-time high possible runner. Great momentum setup with this MACD here. And so that one is breaking this wedge formation. Post earnings, great. That setup looks prime, honestly. So another great opportunity just from scanning. Now that you understand the MACD, you understand how to read it when you're given something that was scanned for you. Lastly, I'm going to show you one more scan you can do for the MACD. You can do the MACD scan, and basically the difference of these. So the fast length is 12, 26. Those are the standard ones. The difference has to be greater than, let's say, 6. And again, the larger the difference, the better chance we have of reversing. So the play's probably going to end. We could probably see it get to a capitulation point if it's too large. MSTR has a very large MACD EMA difference here. You can see it's about 6, like I was saying. So that MACD difference is 5.7 to 14. This is a very large MACD difference. At one point, this MACD was a difference of 20. So you can see the histogram here is showing the difference. So that could be a buy signal, that could be a sell signal. I don't know how you would use this setup, but it's interesting that you're able to scan for that. So sometimes maybe stocks you don't want to trade have a MACD of a certain level. Maybe stocks you do want to trade have a MACD reading of a certain level too. So that can all be scanned for. So that's all I got, guys. That's the basis of the MACD. Hopefully you guys enjoyed it. If you want to check out the playlist of everything we're teaching technical analysis, check it out in the video to the right of me, and have a great trading day. Peace out, traders.